Yeah, for sure. So welcome everyone. Welcome, welcome. Welcome to those of you on the East Coast. I know it's getting kind of late, and thanks for staying up with us. If you're here in the Pacific time zone, we are 5:38, so we'll jump right in. So this evening I was asked to talk about we're going to talk about the trading structure, about how to protect our investments. So we're talking stock market, so our brokerage accounts. We can throw our crypto into this as well if we really want to. And but let's talk about how to protect those things. So we're going to talk about the asset protection side, but more importantly, and probably what a lot of you are here for, is how can we use a structure to get us tax benefits? So if you're out there and you're listening and you're excited to save money in taxes, we just throw up a popper emoji, the excited, the celebratory one. Yeah, just send me a popper emoji. I want to make sure that people are around and listening to me. Otherwise, I'm just talking to a camera. I said the popper emoji, not the clap emoji. I'm just kidding. No, let's do this. It'll be a good time. So when we think about asset protection, and a lot of people say, why do I need asset protection for my brokerage account? My brokerage account's not going to hurt anybody, and that's 100% true. And asset protection is actually something that we think about in two different directions. So we have inside issues that would come from whatever the business is doing. So, or what kind of activity. So if we own a rental property, a tenant suing us, if we own a construction business, a client suing us, or one of our people getting hurt, or some sort of other contractual claim. And when we think about our trading accounts, our brokerage accounts, what kind of internal issues are we going to have? Just stock going to fall off the exchange and break somebody's leg? Sure, it's not. Absolutely not. That would be silly. So there's not really inside issues generally. Now, if you're trading with on margin and you're doing, some risky things, well, maybe there's some inside issues where if you had a margin call, you would have to pay a couple of things, but we're not going to really talk about that today. But the other side of the equation is you got to protect it from you. You are your trading entity or your trading account's biggest liability. Because if you own your trading account in your personal name and something happens, let's say car accident, or you have a contractual dispute, or fill in the blank, maybe you're a professional and somebody names you in a lawsuit along with whatever your professional capacity is, names you personally. Well, now your assets are at risk, your personal assets. So anything that we hold. And man, as a litigating attorney before I joined Anderson, it would be wonderful to see somebody with, tens, hundreds, maybe millions of dollars, tens of thousands, hundreds of thousands, maybe millions of dollars held in a brokerage account. Why? Because it's very liquid and it's owned personally. So how can we put that out of the reach of our creditors? So let's start there. And I'm going to go straight to my whiteboard instead of jumping in to the slides first, because I think we need to just set this up. Okay. So, if we have our brokerage accounts sitting here, excuse my penmanship, we have our brokerage account. Well, if I, Preston, personally own it, I'm down here and I own that brokerage account and I do something and I have a creditor come after me with a judgment saying I owe them lots of dollars because I own this, they can take it from me. They can foreclose on that, force me to sell positions, force me to transfer it over. Now, when we're talking about this, we're not talking about retirement accounts, guys, not retirement accounts. So your IRA, 401k, we're not talking about that. We're talking about brokerage accounts that you own in your name. Okay. So yeah, we want to avoid that. We don't want our creditors to be able to take stuff because listen, we are a big liability because we all drive cars and we all do silly things. And just a quick story. So me in my personal life, the story I like to share is at one point in time, I thought I was a fence installer. So I went to Home Depot and rented an auger and drilled a whole bunch of holes in my backyard. And this is the short version. And there were 9 holes, drilled 9 holes, and I cut the phone the 400 pair phone line in my backyard in 9 different places. And because I didn't call Blue State, because I thought, hey, and it made sense to me, just put the holes in the same place they were before, and you don't need to call Blue State. Well, I went too deep. I cut the phone lines, and I had a $20,000 bill to repair those phone lines because it was an emergency. It was Sunday. It was a silly thing to do. But anyway, so when we do stuff in our life, and $20,000, doesn't seem like too much now, but back then it might as well have been $1 million. Okay. Um, and we'll talk about IRAs briefly at the end. So hold on to that question. But we are our biggest risk. You get into a car accident, if you hurt somebody, depending on what their profession is. I've seen judgments up in the millions of dollars because if you run into the local up and coming neurosurgeon who just started their career, but they're brilliant and something happens to them, hey, you know what? You're going to be on the hook. And there's these calculations that courts do. How much, excuse me, how much is their life worth, right? So that's the big thing. So we have to be really, really careful there. So um, we are the biggest risk to these accounts. And it's just simple. I mean, I have 2 teenage children at home as well, and they drive cars and they're broke. And because they live at home and they drive my cars and they're on my insurance, if something happens, who are they going to sue? They're going to sue me because my kids are broke. I can see their accounts. So that's the thing. So we have to think, okay, how can we take away this direct ownership and get some protection? So if our creditors do come after us, and I'm going to erase my little auger picture here. If our creditors do come after us with a judgment for who knows how much money, what can we put in between us and our accounts in order to protect those accounts? Now, a trust, a revocable grantor trust, like a living trust, is not asset protection. It is only for estate planning. And if anyone says, well, but it's held by your trust, so they can't touch it, that is absolutely false. Your living trust does not provide any asset protection. Even a personal property trust, a trust for anonymity purposes, is still a revocable grantor trust, meaning it doesn't provide any asset protection at all. So, what do we use? We put a Wyoming LLC in between you and your account. We make your account owned by a Wyoming LLC because it gives us charging order protection. And if you want to talk or learn more about the charging order protections, come to that 2-day summit. I'll be teaching a whole lot more about it, but that's not the focus of tonight. So we're going to just touch on it. What does charging order protection mean? Essentially, it means that your creditor cannot foreclose on your ownership interest of your LLC. In some states, they can. Looking at you, California, where they could just take it. So we like Wyoming because they have charging order protections and also anonymity. Wyoming does not request or require any ownership information at all. So if they don't know who owns it, if the state doesn't, then they definitely can't make it public because they don't know. So we really, really like this Wyoming LLC structure. And if you set it up right, you don't even have an additional tax return. If we're just talking about holding your brokerage account for asset protection, that's fantastic, right? We just move our brokerage account into this Wyoming LLC, and now our creditors can't foreclose on our interest in our business. And we can even elect not to take distributions. So we're going to take $0. Our brokerage account is making money. That's great. It's going up in value. Wonderful. We can move some money into the bank account here in the Wyoming LLC, but we don't have to. And we definitely don't have to take any money out. We just let it grow and grow and grow. So what's the end result really? Most of the time, the creditors see this kind of structure, and I would say 99.9% of the time, they don't even try to get a charging order because they know they're never going to get paid. It's all a calculation, cost benefit analysis to them. So we like to do that. Now, what is missing though? There's no extra tax returns. It's just a disregarded LLC. Generally, it could be a partnership, but most of the time disregarded. So we don't have that extra tax return. Everything just flows through. So if the brokerage account is kicking off dividends or income, who pays the taxes? You do. So you get a 1099 for any income and you're paying tax, even if you don't take any dollars out. Okay. That's not super fun. So what can we do? Like, this is great. All right. Creditor protection, wonderful. So we have that. But we're not here to talk about that exclusively. What we're here to talk about is how to set up your brokerage account, your personal brokerage account, in a way that we can actually get some tax benefit. Because ultimately, we want to save some money. Yes, we want protection, but we also want to protect what we've earned from Uncle Sam and keep more of it. So that's what tonight is all about, but having the basic understanding of, okay, this is a very, very basic asset protection structure. That's what we want to have here. And then let's jump into the rest and talk a whole lot about how to save in taxes. You guys ready? Before I move on, William, I'm just going to address your question here about IRA. Yeah, there's at least one thumbs up. One person's ready. Okay, the rest of you don't really care. That's fine. No, the popper emoji. Thank you. But William, so what about IRA accounts? So IRAs are individual retirement arrangements. And IRAs, yeah, knuckles. IRAs can only be owned by you as an individual and not really owned necessarily you, and really future you are the beneficiary of that account. Now, all 50 states have in their statute protections for IRAs, and almost all of them are excellent protections. Almost all of them protect them 100% from creditors. There are a couple, and the main one is California, where it's not 100% protected, but there's nothing you can do. Okay. The only way to really get 100% protection for an IRA is to roll it out of an IRA into a 401k in California, because 401ks are protected by federal law and IRAs are protected by state law. Um, just nature of the beast. There's what, 53 million people in California. The state wants to be able to reach in and pay creditors, I guess. Just one of those things. Anyway, all right, David, I'm ready to roll. Let's do this. So we're going to talk about the trading structure, and we're going to talk a lot about taxes and how the trading structure benefits us in when we think about taxes. So it'll actually give us the asset protection, and you'll see as we build out this structure what asset protection is available and where and how it works together with the structure. But one of the things that comes up a lot when we think about trading and investing in the stock market is trader tax status or tax trader status. And that's something that a lot of people, they aspire to be these professional traders, and they want the benefit of it because it allows us to write off certain things. And I totally get it. But for the majority of us, almost all of us out there, it doesn't make sense. It's too hard to get, and it's very, very risky when we're talking about audits. So we want to avoid all of those risks. We don't want to put ourselves in a place where, hey, do I really have to pull out my log to show the IRS that I did trade this many trades continuously throughout the year in order to reach trader tax status? And then just to write off some expenses, that doesn't make sense. So can we come up with a way to get all of the tax benefits, other than one, and we'll talk about it briefly, all of the tax benefits of tax trader status while also not having to meet the strict requirements? And that's really what we're going to talk about. So let's just jump in, because I want to show you a way that we can do that. So trying to qualify for trader tax status is very difficult. It's not an easy thing. So, and there's no clear cut rules. There's no, hey, these are the rules. If you check all of these boxes, you are a professional trader in the eyes of the IRS. There's no clear cut rules. It's, yeah, these are some factors. And if you meet most of the factors, the IRS might allow it, but they don't have to allow it. It's one of those super gray areas. And so let's take the gray out, make it black and white. And that way we can just move on and write things off and well, tell the IRS man to go away. But a few of the things to qualify for tax trader status is you have to continuously trade, meaning you can't trade just a couple months of the year and then take a few months off because you made enough money to just relax. You have to continuously trade. And generally, that's over 200 days a year. Trading days, 200 trading days. That's almost all of them. It has to be your primary form of income. So if you are a physician who goes home and sets up some trades every night, well, unless your primary source of income is the trades, well, then the IRS is going to say no. And it's one of those things where they want to see you actually doing it more than anything else. So if you're a part-time, I don't know, music teacher and you trade part-time, you need to keep track of your hours because they want to make sure that you're actually trading and that's your main vocation, the thing that you do more than anything else. Other things that are important are how long you hold your assets. So you can't hold longer than 30 days. And you have to make, generally, they say you have to make 4 round trip trades per day, per trading day. There's all kinds of these things where you have to keep a log, and then the IRS can come to you and say, yeah, but you took a 3 month vacation. We know you made enough money to take a 3 month vacation, but you did it anyway. So we don't even want to play those games for most of us. So I'm going to show you a way that we just set up entities to structure it to get the same write-offs. Why do we want tax trader status? In order to write off things like our ongoing subscriptions. Those things happen, right? So we have charting accounts, or to write off our new computer hardware. Maybe you're in a place where you need 6 screens. You've seen those traders where they have 3 screens and 3 screens, and they have all the different charting accounts on most of them. And then on the one side, they have their Netflix playing in the background. They're just watching TV all day. They don't care about the charts, right? Anyway, so that's the thing. Hey, how can we write more things off? So with the structure coming up, I'll show you how to write the things off, but I do want to address the little tiny baby elephant in the room. So what we're going to talk about tonight is using corporations and LLCs or limited partnerships to get all of the same tax advantages to take advantage of those things that we can write off. However, the one thing it does not do is you cannot make a mark to market election. So if anybody out there, honestly, who out there wants to make a mark to market election for their taxes, and that's why they want to be a professional trader? Anybody out there? I don't see any hands going up, and that's fine. What is a mark to market election? I'm sure some of you are thinking, what even is that? I don't even know if I want it or not. So a mark to market election, for those of you that don't know, is the IRS will treat all of your positions as if they were sold and repurchased on the 31st of December. Meaning, and let me go to my whiteboard here really quick, just so to draw out something really quick for you guys so you can see. So let's say, that we have, this is our calendar, and this is January 1, this is December 31, and this is April 15th. Why those dates? Well, this is tax day. This is the end of the year, and that's the start of the year. So let's just play this out. So if we invest and our investment's going something like this, and then it happens to go up by December 31st. So if our cost basis is, let's say, at $100, and on December 31st, it goes to $1,000 for that stock. Okay. If we make a mark to market election, it is treated as if we sold it and purchased it right back for $1,000, realizing $900 per share in gain. We have taxable gain, even though we still own the stock and we actually didn't sell it. A mark to market election is treated as if you did sell and repurchase the stock on December 31st. So now we have this $900 per share, $900 per share in taxable income. Okay. And then what happens in the spring every single year? Why is there a sell in May and go away? Because the spring always goes down. So let's say that it goes down to $300. Well, I still have to pay tax on my $900 in gain, even though I bought it for 100, it's only worth 300 now. So a mark-to-market election is something that very advanced traders may use occasionally and sometimes, especially if you're trying to avoid a wash sale rule issue, or if this went down. So if the stock went down by December 31st and then went back up, well, then, a mark-to-market election, you can realize this loss to help offset some taxes, but you have to know what you're doing. It's very advanced. And some people have tried to take significant mark-to-market losses, and they write it off on their taxes. They file their taxes on April 15th, and then 5 years later, the IRS says, oh, we're going to deny your tax trader status. And all of this, I saw one case where it was a little over $3 million in losses that this guy took, and it was all denied, all of it. So from when he took it to when they actually filed the suit, he had to pay all of the taxes, penalties, and interest plus court costs. So you have to be really, really careful with a mark-to-market election. And I generally don't run into anybody who it really helps. And most people that could use it, that it would be great, have a full-time other job, so they can't because they're working another job full time. So, all right. Let's see, question here. Working with Anderson to set up the straight trading business. Cool. You're going to kind of see how this goes today. All right. Yeah, I'm going to show you. So your question here about how to set it up. We're going to walk through the structure and you'll see exactly how to hold it and exactly what to report to your brokerage. All right. So if you have follow-up questions on the mark to market or you think it's for you, then we need to have a chat because they're like I said, very limited on those who actually can use the mark to market election. So generally, Cindy, generally 4 to 5 trades round trip per trading day are the minimum. But you have to do all of the other factors as well. It's not just, hey, you did one thing, so you're a professional trader. You have to trade continuously. It has to be your main source of income. It has to be 4 to 5 round trips a day. It has to be over 200 trading days per year. There's all of these other factors in there that are really, really important. You can't hold longer than 30 days. So if you wanted to buy Nvidia and hold it for, the next 3 years because you think it's going to go to 1 million, you can't. So there's all these little pieces to it that actually qualifying for tax trader status is very, very difficult. Very difficult. So let's show you how to take those. Yeah, I know. I didn't set the time. It's 6 o'clock here on the West Coast, but we'll try and get you, William. And I'm trying to keep you awake, so I'm trying to bring the energy, William. We'll do our best. But Cindy, yeah, let's show you how to get those benefits. Other than the mark to market, how can I write things off? How can I write off my computer, my subscriptions? How can I get additional tax benefits out of it? That's what we're here to do. I just need to lay the foundation first. All right, so what do? We set up a structure. And the structure is not super complicated, honestly. It's not. So what we do is we set up either an LLC or a limited partnership to hold the brokerage account. Where does the brokerage account go? It goes in the LLC or the limited partnership. Let's see if I can get this pen. It goes right here. Okay. The brokerage or the trading account goes into the Wyoming LP or a Wyoming LLC. Why Wyoming? It's anonymous and it has the charging order protections we're looking for. So we still get the benefit of everything we started off with. We get the asset protection piece. We're protecting our assets from us because we are that biggest liability. Okay. So that's where we're going to hold the brokerage account. And the number one follow-up question I get, or when people come to me talking about setting it up, is I put my brokerage account in the corporation, right? No, it goes in the Wyoming LP or the Wyoming LLC. Okay. That's important. That's where the brokerage account goes. That's why I'm making sure to emphasize it. Very, very important. Okay, guys. All right. So we set up a Wyoming LLC taxed as a partnership, or we set up a Wyoming limited partnership to hold the account. And you're one partner, and then you set up a corporation to be another partner. So I'm going to go back to my whiteboard here. So why do we set it up like this? Well, a couple of reasons. So at the base of every structure that we set up is your estate plan. And everyone should have an estate plan if they're on this call. If you have children or property, you need an estate plan. It's not just for super wealthy people. So we set it up with the estate plan, and then we set up our Wyoming entity. This is an LLC, tax as a partnership or a limited partnership. Now, the limited partnership, one reason we like it so much is having a limited partnership says there is absolutely someone who's on the hook as a general partner and someone who's just an investor. So can you guess who just the investor is? It's actually you. So you are the limited partner and you're going to hold 90% interest. And then we set up an LLC or a traditional corporation, an LLC taxed as a C Corp, or a traditional C Corporation Inc. to hold the other 10% and be the general partner. So the general partner, their whole purpose is to run and organize and maintain the limited partnership. So when we say as a general partner, you as a limited partner, you cannot do anything. You as the limited partner cannot do anything. But who is the director or the president of the corporation? Well, it's you. So you, as the president of your corporation, are going to run all of the trades and manage the limited partnership. The LLC would be a manager managed LLC. So that would be the manager would be over here. So it's one or the other, just depending on how we set the structure up. But this is important. Why? Well, it owns 10%. That's great. But it's going to be running all of the trades, managing all the trades. It's going to make the determination of the next steps. If you're doing covered calls, cash secured puts, if you're doing iron condors, I don't know. It doesn't matter who's doing it. The corporation is making those decisions, those management decisions. Okay. And then the corporation is actually owned 100% by your living trust. Weird, right? Well, why do we do this? Well, the corporation is this special entity. This guy right here. Corporation has a special tax code because if we just have the blue box, just the blue box, we live by our personal tax code. And our personal tax code is this: earn, tax, spend. We earn money first, then Uncle Sam gets his next piece, and then we get to spend or try to live off of whatever is left. But the corporation's a little bit different. On the corporate side, we earn, spend as much as we can. We pay tax on whatever's left over. That's a big difference. So Tina, one person LLCs in some states have less protection, but right here we have two members of the LLC or the limited partnership. We have you and we have a corporation. In the legal world, a corporation is essentially a person, a taxpayer, a separate entity from you when it's a C corporation. It's not even passed through. It files its own taxes, everything. So you don't need another human being to set up a partnership. We just use the corporation as the other partner. In fact, the managing partner or the general partner, the one that's doing all of the business, running things. So we want to use the corporate tax code as much as we possibly can. That's the idea. We want to make sure that, hey, this is how we can get all of those same deductions that tax trader status gets, except for the mark-to-market election, by using the corporate tax code instead of our personal tax code. In fact, we can do a whole lot more with the corporate tax code than we can in the mark-to-market election. It's kind of a big deal. So what's the minimum dollar amount you would suggest into the limited partnership? What about umbrella policy covering some of the exposure? Hey, insurance is great. I'm not saying don't have a personal umbrella policy. I'm making stuff up. Umbrella policy. Okay. I'm not saying that. But I am saying that insurance companies don't pay dividends by paying out claims. They have all kinds of loopholes and exclusions, and sometimes those judgments are way more than the insurance. And a sidebar, I was sitting in a mediation where a guy was backing up his fifth wheel at a parking at a campground and hit a door that somebody had left open on their car, and they were actually standing in between the car and the door. His insurance paid out the limits, full limits paid to this lady, and she still sued him for more. So you have to be careful, okay? Because insurance is great and it's very important. It's an integral piece, but it doesn't always cover everything. There's a case out of Florida where a guy's step niece stole his golf cart, and he got sued, and the other party was awarded $50 million. Do you have a $50 million umbrella? Probably not. Nobody does. In fact, I wouldn't recommend it. So insurance is important. Yes, it's integral. It's a piece of the pie or the protection, but not all of it. So we want to put stuff outside of the reach. Okay. Is a 95.5% ratio okay? Yeah, for sure. We can adjust those ratios. It's not set in stone, a 90-10. That's generally what we use because it seems to work out well for us. Now, if you're making a ton of money and you're just, you're very, very good at trading and you're just getting a huge return, then a 95.5 might be better. And you'll see why here in just a minute. So, and we'll talk about the tax benefits here as we keep going through the slides. All right. So we want to do something like this, and we set it up this way. And that C corporation is really important because that's really where we get all of the tax savings. Okay. Because again, remember the LLC or the limited partnership, it is going to own the brokerage account. And you, as a limited partner, you're going to do nothing, and the corporation is going to do everything. It's going to maintain the books. It's going to make the trades. It's going to make all the decisions. It's going to buy the computer hardware. It's going to rent your office from you. In fact, 14 days a year, it's going to rent your entire house from you. Your corporation is. It's going to make sure that all of its directors are taken care of in a way that, hey, you know what? You had out of pocket medical expenses. You're doing such good work. We want to take care of you. Those kinds of things. The corporation is that key piece because it can do it, but you can't, not in the same way. So, why C corporations? Great question. Because a C corporation can do a whole lot of what tax-free reimbursements. And I'll walk through a couple of examples here in just a couple of minutes on that. So here it is. So what can a corporation do? Corporation can buy all of your equipment, can pay for all of your subscriptions. Corporation can rent an office to do your work from you. Corporation needs to hold 14 meeting, well, needs to hold 2 meetings a year, but can hold 14 meetings a year and rent your house from you. It's called the Augusta rule. It can reimburse you for your internet, for your cell phone, all of these things. So that's why we want to use that C Corp. Could an LLC, a S Corp? So generally, I don't like the S Corp because S Corps require a reasonable salary. And here the idea is to move enough money into the corporation, just enough to cover all of the reimbursements. So let me go back to the whiteboard. All right. So if we're looking at it this way, and so if you want to take a quick screenshot of this, go ahead, but I'm going to move on and redraw it so we can talk about taxes. Okay. So when we have our estate plan down here, this is for estate planning purposes only. It does not give us asset protection. We have our Wyoming entity over here. It's either the LLC or the limited partnership. It just depends, and having a one-on-one consultation to determine which one is better for you is the best idea. And then we have this, and we like the C Corp, or an LLC taxed as a C Corp. And so we set it up this way, right? And then 90%, 10%, you'll see why. All right, so let's talk numbers just for a minute. So if I'm trading, and let's say that I'm doing it very, very well, and I make $100,000 in my trading portfolio, $100,000 profit that I want to take out of that portfolio, just to, pay bills. I want to go on vacation. I want to pay my mortgage, whatever it is. I made 100 grand. And because I made 100 grand, then that is taxable income in one way or another. Now, because the corporation owns 10%, then out of that $100,000, 10,000 goes over to the corporation. And I know some of you are thinking this, and I'm going to say it really just to be very honest. Some of you are thinking, but Preston, corporations are taxed twice, taxed at the corporate level and then taxed when you take dividends. And the idea here is you're not going to take a dividend. It's not even going to be an issue, and you'll see why here in a second. Okay, so we're able to move $10,000 over there. That means 90K goes down to me and is still taxable to me. But what if I have $30,000 in expenses over here? I only have 10,000 in income. Is there a way that I can shift additional income out of this $100,000 over to the corporation? Of course there is. I wouldn't ask the question if there wasn't. So what we do is we set up a guaranteed payment to partner for the services the partner is providing in order to increase this amount. So it would be a $20,000 guaranteed payment. So we're actually getting 30K over here. And that means this isn't 90K anymore. It's only 70. So I went from $100,000 personal taxable income to 90K and now to $70,000 in personal taxable income. So I've saved $30,000 in taxable income. If you're at a 33% rate, that's $10,000 in tax savings. Who wants to save 10 grand in tax? But Preston, the corporation's tax double. So we just moved this 30K over here onto this side and have to pay double tax, right? No. So out of this 30K, we are going to take all of our reimbursable expenses. So we are going to reimburse ourselves for the use of our home office, for our home internet. We can actually reimburse ourselves for our cell phones. We can pay for all of the expenses, such as the charting accounts and all of the things we're paying for anyway, just to run our business, our subscription services to, thought leaders in the industry, those kinds of things. All of that comes out of this 30K. We can also, with a C corporation only with the C corporation, reimburse our out-of-pocket medical expenses. Out-of-pocket medical expenses. So if you have copays or catastrophic caps or prescriptions, anything that you're paying out of your personal pocket, medical wise, you can reimburse from a C corporation only. So we like that. So what the idea is, okay, we have $30,000 in expenses and we're going to take that 30K and reimburse ourselves for all of those things and pay zero tax. So if I have $30,000 in income in my corporation and $30,000 in expenses in my corporation, then the taxable income to the corporation is what? It's zero. And if the taxable income in the corporation is zero, how much am I paying in tax? Zero. How much am I paying in double tax? Zero. That's the idea. And $30,000 is conservative. You could probably get way, way, way more out of it. We just can't go through all of the different things tonight because there's too many. What about taxes on the C Corp? I think we covered that. If you have follow-up questions, please drop them into the chat because I have it right here in front of me. I want to answer your questions. You're here. You're giving me your time. I want to give you some answers. So this is the idea. Now, why only 10%? Why not raise this to 30%? And then we don't have to worry about the guaranteed payment to partner because someday you might make $1 million up here and 300,000 might be pretty tough to get out of that corporation tax free. I've seen you can get 30,000 easy. That's all day because like the 280A is called the Augusta rule. And you can actually rent your property to anyone for 14 days per year and not report that as income. It came about because at the Masters tournament, there's not a lot of hotels around the golf course, so people would rent out their houses. And in fact, 2 years ago, now 3 years ago, I think, yeah, because anyway, 3 years ago, there was a family that rented their house out during the tournament for $100,000. They didn't pay any tax on it because of the 280A rule. So if you can rent your house out to anyone you want for 14 days a year, can you rent your house out to your corporation for 14 days a year? Sure, you can. That's a separate taxpayer. It's somebody else. And what does a corporation do? It has its meeting once a month plus two extra meetings, its shareholder meeting and its directors meeting annually. So now we have 14 meetings per year. And what do? We go out into the market and call around and see how much it would cost to rent a boardroom at a hotel that has AV equipment and lunch and breakfast service and all of these things and say that's $1,000 a day. Okay, well, that's $14,000 you can charge your corporation to use your house. And you pay zero tax, and the corporation writes it off as an expense. So, all right. We scroll back up, lots of questions coming in. We covered that one. I wanted to also pull a salary from the C Corp to defer funds to a self-directed account. Yes, and it doesn't have to be a reasonable salary. There's no such thing as a reasonable salary requirement in a corporation. So if you start making more money than $100,000, or you want to divert more of that 100 grand over here, you can absolutely sponsor a solo 401k. And the limits, if you're under 50, you can get up to $72,000 into that 401k. If you're over 50, there's catch up to 80 grand into a solo 401k. And this is per person. So if you're married, put your spouse on there too. And you can get 160 grand into a 401k. If we can put it all in there, then how much you can make a ton of money. So that absolutely, and there's no reasonableness. You pay yourself what you need to pay in order to get all that in there. So that's a great question. Thanks for asking. Uh, so can I use this method if I'm trading? Estella, yes, that's what this is all about. Our trading account, where does that go? The trading account goes, oops, all the way back. Now we'll put it over here. Sorry, guys. I'm scrolling a lot. Where does our trading account go? Our brokerage account, remember, goes in here. The brokerage account is held by the Wyoming LLC or the LP. So you are constantly trading. That's how you're producing. Well, you don't have to constantly be trading, but maybe you're investing in some high return ETFs. You're making a few trades. You're doing some cover calls, some cash secured puts because you're risk adverse, like this guy. I'm an attorney, so of course I am. But that's what we're doing. We put that brokerage account into the Wyoming LLC or LP, and that's how we're making our money. That's how we're making this income that we can shift over to the corporation. Because the more we shift over there, and get out tax free, the less we're paying tax on. So again, like in this example, if we shift just $30,000 to the corporation, we're able to get it all out tax free. 33% tax bracket, that's $10,000 in tax savings just by setting this up. And then, hey, do the math on your tax bracket. So I live in Utah. State tax is 4.85% plus my personal tax rate, about 33%, right? So a third of every dollar that I make goes to the government between state and federal. Okay. So that's the idea. So we want, and then if we can shift more over, and let's say that this number, our 30K number in expenses, what if it was 90K that we could get out by sponsoring a 401k and doing other things and being a little more aggressive? Well, now if we get that much, now I'm saving $30,000 in taxes. So just by setting up these two entities and running them correctly, we can realize these huge tax savings that only a corporation can use because corporations, again, they earn, then they spend. And that spending can be all going to you to reimburse you for stuff that you would use post-tax dollars for anyway. So this is a very, very powerful structure when we're talking about it. Okay. Because hey, you know what? Here's the thing. We want to make sure that we are, moving money over to that corporation. And the corporation actually has to do work. And that's why the LP setup is better because if the corporation is the general partner, only the general partner is doing any work. So that way we don't have any question about who's actually doing the bookkeeping. Well, only the general partner can. So it has to be the corporation. So how would you manage an account from an advisory firm that charges fees? Can they somehow be deducted? So the fees are generally deductible one way or another. as either a business expense, or sometimes they're just added to your cost basis. So on those things. But if you have the dual entity structure, paying any professional fees, including to me at Anderson, if you work with us, then that is a deductible expense to the corporation. It's professional advisory fees. Absolutely. Where's the guaranteed payment to partner documented? So you have the documents. And yes, they need to be documented. You need to have a contract, and it shouldn't be updated more than annually, because we cannot tie the guaranteed payment to partner to the performance of the account. It has to be a set payment amount. So yeah, you have some homework to do. You have to figure out, number one, how much money can I get out of my corporation tax free? If that number is $30,000, you need to figure out how to get $30,000 in. So, um, and remember, about annually, could you change it like once a year or twice a year? I think that's too much. If you do it one time because you need to shift more income over, but do some homework. Run your numbers. How much can I get out tax free? That's how much I need to get into the corporation, and that's what's important. What is the minimum account size to make it feasible? It's not about account size, it's about income. So when we look at that, we have to maintain two entities. Okay. That's part of it. You have to file two additional tax returns. We have a partnership return and a corporate return. So those expenses need to be factored in. But it's not about size. You can make a ton of money on a small account. Just depends on what you're doing. Okay. So think about it's an income level thing. And if you're not making a ton of money and you just want the asset protection, absolutely do that. Put it into a Wyoming LLC that's just disregarded. And then you don't have the additional tax returns to worry about, or the second entity. You have to be profitable in the LLC to make the structure work for the C Corp. Is that correct? Not necessarily right away. Not necessarily right away. So, and that's one of the other things. So when we think about a C corporation and in this setup, maybe you are getting started, maybe you had an off year, lots of things can come up. State plan, that's you, like this. Okay. So, do we have to make a profit to get those reimbursements? Not necessarily. If you set this up in order to get some tax benefits, and you know that your brokerage account is going to grow and you're going to make some money, then if you set this up with the corporation, and the corporation doesn't have enough money because we didn't even the 10% isn't really covering the expenses, and we don't have a guaranteed payment to partner yet just because we don't have enough income. Well, you as an individual, and this is going to seem circular, so follow me on this, okay? You as an individual can lend money to your corporation. The corporation will reimburse you. So for this, the money you're lending to the corporation, what do you get in return for that? You get an IOU. They will write you a promissory note, and then future income can go to paying off that debt. So, and they carry forward the loss to offset future income. So ultimately, this way you can still take advantage of all of those deductions today and offset future income. Think about what is it? Uber. Uber didn't make any money for the first 12 years of its existence or something like that. Maybe not 12, don't quote me on that, but a lot of the years. It just barely started making money, I think, last year, because it can carry forward all of the losses from the startup. You just carry them forward. And that's the other thing about a C corporation, is there's no such thing as a hobby loss rule in a C corporation. So pay back the borrowed 20K. Yeah, I mean, here it is. Only with trading, or can I use a different type of income into the Wyoming LLC? So Estella, depending on what kind of income you're talking about. So I don't love it, but I have seen people set up a sub entity off the corporation up here. And it might be an LLC, not a Wyoming LLC, but it might be an LLC in the state that you're living in. And that might be wholesaling. Like maybe you're doing wholesaling for real estate. And then all of the income flows down to the C corporation. Would I do it directly in this corporation? Absolutely not. I just had this discussion with my colleagues earlier and they said, why not? I said, because it owns 10% of my trading account. That's silly. I want to have any other operating business that I want the income to flow to the corporation. I want to have it in its own sub entity and separate from the actual owner of my trading account. But you can do that. Can you trade in a solo 401k? Can you control the trades? Absolutely. So going back over here, if you have a solo 401k, it's a self-directed account. You can own real estate in it. You can do all the trades. It's going to have its own brokerage account, but you can be in charge of it 100%. So if you are doing really, really good on this side, you could do the same trades in a tax advantage account. Why not? I mean, if you're crushing it, do it. That makes me really excited, Tina. So I hope you do that. What is a 14-day rule called? That is the Augusta rule or 280A, 280 alpha. Let's see. But if it's separate, I'm going to assume IRA is managing the investments rather than the C Corp. Separate investment advisor. The C Corporation, in that case, if you have an investment advisor who's taking care of the trades and charging you a fee, the C Corporation still got to help run the business of the limited partnership or the limited liability company. Still going to do the bookkeeping. It's going to hire that professional. It's still going to ensure that money moves. It's going to still direct that professional to say, hey, I'm a little more risk adverse or I'm a little more risk forward, those kinds of things. So you can still do it. You can still use this structure because it's not just managing the trades, it's managing all of the aspects of the business because the limited partner just puts in money and sits back and does nothing. It's all about the general partner. All right. Jill is asking, talk about how to get your brokerage accounts into the LLC. We found the task more difficult and ended up creating a trust. That is one option. Okay. So um, Jill's question is this. If we have this set up and we have a brokerage account, especially if we have a current personal brokerage account, some brokerages, some firms will want a minimum amount to put into to actually have an LLC account or LP account. So they'll have a minimum. Maybe you don't have the cash to meet the minimum. Okay. Well, we can use what's called a personal property trust. We can put it here. There's a special kind of trust that holds your brokerage account and we assign it to the LLC. That is one option. Another option is find somebody else who will do it. I used Tasty Trade and they didn't have a problem at all opening that LLC account. And I understand there's other reasons why you might want a personal account too, because some brokerages offer um, real-time charts to personal users and not to professional users. They want to charge you more for professional users. In that case, you have a couple of options. You can use this trust account, or you keep that personal account open with the minimum amount, and you just kind of cherry pick the information off the personal account and then go do the trades in the LLC account. So there's lots of different ways to make that work. Now, a couple of things, okay? The brokerage has to allow you to put it into a trust. Most of them do. If they don't allow you to put your account into a revocable grantor trust, like a living trust, use someone else. Find someone else in the market. You don't want someone who won't allow you to do estate planning. And essentially, this trust up here is just a revocable grantor trust that's like the cousin to an estate planning trust. So, but no, I can absolutely understand why you asked the question. Um, I'm not sure why you weren't able to use the trust for those two other brokerages. That's silly on their part, not your part, their part. I don't understand why they would do that. All right.
Hey, Preston, I'm going to pipe up really fast if you're good.
Yep.
I know there's a lot of questions coming in, a lot of you still on. I just wanted to say I did throw out the free strategy session link with Preston and his team. So that link is there in the chat. I wanted to make sure you saw that. I know you're kind of still coming in with a lot of questions. So I know if you don't get to your question or if your question isn't answered, click on that link. And what happens, Preston? It goes to a page, they fill out some information, and then someone from your team calls them, right?
Yeah, and then our team will reach out and set up a strategy session. It's 45 minutes. It's completely free, and they'll walk you through this whole thing. Determine, does an LLC make more sense? Does it make sense to have that corporation right now? They'll kind of do all of those things. So the link was just dropped again into the chat, and I have just a couple more slides, and I know we just have a couple more minutes, right? Were we scheduled for 90 minutes or an hour?
Hey, whatever you got, Preston. We're on. I just want to make sure
All right.
you had that link. And by the way, can you see that link? I can see it. I hope
I
everybody
can
else can
see it.
see it.
Yeah.
Just want to make sure it's posted there twice now. Click that link. That should work. Let us know if not.
Yeah, for sure. What's my phone number? I'm not giving you my phone number, Tina.
Use
My
that
wife
link.
isn't, my wife's in the other room. She would get really mad at me.
Yeah, use that link, guys. That's the best way to do it. Thanks.
All right. Yeah, so let's just do a side-by-side comparison because there was a question here. If I use your structure, will I be treated as a professional trader? No. In fact, this is a way to get all of the benefits except mark-to-market election of being a professional trader without having to meet the really strict requirements. So if we look here, setting a tax trader status is very difficult to achieve because the IRS is not a checkbox kind of test. It's a touchy-feely kind of test. There's factors that will lead them in the direction to treating you like that. But if you don't meet most of them, then they can just say no. And we don't want to leave that up to chance. We don't want to leave it up to some IRS person who, guys, I live in Ogden, Utah, near one of the IRS offices, and most people that work there do not like their job. And we don't want somebody who's just grumpy going to work trying to say, yeah, you're not a trader. You don't qualify for all these deductions. So why even mess with it? And things like the Augusta rule are not available to a professional trader, right? So using the corporation to reimburse your out-of-pocket medical expenses. Again, that's not something that just an ordinary trader can write off. So the corporation is a much, much better route. So will there be, this will be up on the Protect Wealth YouTube channel. So yes, a recording will be available for sure. So just back to the slides here really quickly. I want to make sure that I leave plenty of time for Q&A here at the end. But using the entities, we get a lot better tax treatment. We don't have to meet those requirements. And we can do things like sponsor that 401k. We can do all kinds of stuff to get to move money over there. And we just don't want to put even like a long-term holds at risk here because if we decide to be an investor and a professional trader, you can't live in both worlds according to the IRS. So we just want to make sure that we're avoiding that issue completely. And the easiest way to do that is to actually use the structure that I drew, right? To use this structure with a corporation and a limited partnership or the LLC in order to get all those tax advantages. It really is. And it's a pretty simple structure, guys. It's not super complex. And it really, to me, it's a big game. And I think it's important to look at it like that. Because with this corporation, the game is which rules can I use this year to save money? And then every single year increasing that. So maybe this year you do get 30K and next year you get 35 and the next year you get 40. This is every single year that you can get this tax-free money out of the corporation because you're showing it as an expense. And then it goes into your pocket tax-free. So at 30K, 33% total tax rate. I mean, $10,000. And that's every year. It's not one time, it's every year. Oh my, yeah. That's why I'm passionate about this and why I get to teach about it because it really is. It's huge. And $10,000 in your trading structure, if you put that $10,000 right back to work, and think about how that's going to compound year after year after year. So yeah, if you do want to get in touch with us, here is actually a QR code to that same link. There's that link again here in the slide so you can see it. You can scan it with your phone. If you're on your phone, I don't know if you can touch the link or not, but maybe you can like hold down and copy and then paste it. But essentially, yeah, sign up for it's 45-minute strategy session. We'll talk to one of our professionals, see, does it make sense for you? Maybe it does, maybe it doesn't. I don't know, but I know that the tax savings benefits are really, really there. Tony, the webinar is going to be posted on the Protect Wealth YouTube channel. So it'll be there in the next day or two. All right, that's all I got. Do we have any other questions? Let's go through the questions. Kendall, what do you got for me, brother?
Man, I got so many questions. I don't know where to start. That's great. Great questions tonight, actually. I was
Yeah.
impressed with the number of questions. I'll put that link back in the chat, guys. Guys, honestly, the reason we bring Preston on, obviously, is because he's an expert and his team's really good at what they do. But for me, I can tell you, for me personally, is when you use the legal structures properly, you're going to save a lot of money and a lot of heartache over a lot of years. It's as simple as that. And I love it, Preston. You mentioned that insurance is good, but it won't save you from everything. So don't rely on that. Make sure and use legal structures. I just don't get it, Preston. All the time, we have a lot of very wealthy investors who come on and have never used an LLC or a limited partnership before. It just floors me. The massive amounts of benefit they've missed out for years. What you don't know can't hurt you. So anyway, no, I think we're
Yeah.
doing good. Go ahead.
Jill has another question. So if you have long-term holds and are not selling, if you have this structure, do you have to sell each year to be able to transfer the 10%? No. No, you don't have to. Absolutely not. We're just transferring 10% of your realized gain or loss, hopefully gain. So the corporations only do 10% of the actual gain that you make. So if you're trading to produce income so you can live off of it, we're going to shift it over there. Now, Jill, if you are just investing to hold long term and you don't want to sell it, then maybe the dual structure isn't right for you. If you're just investing in ETFs and you're not trading, you're just holding it, then maybe it's not. But if you have any kind of dividend income or you make trade income because you do move in and out of positions, that's when we kind of think about, all right, that's when you need to have that corporation and then start shifting because we want to use the corporate tax code. It is just so much more advantageous than an individual tax code. So yeah, but you don't have to sell because it's not due anything except if you have a guaranteed payment, then it's due. But that 10% is not due anything until you have income.
Good
Can I
question.
reimburse my wife's insurance premiums? This is a great question. So your wife's out-of-pocket medical expenses would be covered. However, most of the time, medical premiums already come out pre-tax. So like I work here at Anderson, I have insurance through the company. It comes out of my check before I pay taxes. Can I get double tax advantage for that? Absolutely not. So looking at it now, if you're using post-tax dollars to pay the premium, then absolutely you can get reimbursed for it. All right.
A lot of good questions
Uh,
tonight. I'm impressed.
yeah. It's affordable care. Yeah. So if you are doing it, so if you're paying out of pocket, then absolutely your out of pocket medical expenses. You just can't get the double tax benefit. So like I can't use my corporation to reimburse the premiums I've already paid with pre-tax dollars. But yeah, if you're paying after tax, then absolutely.
And
Yeah, even if
Hancock,
she's not part of the corporation, you can pay for yours, your spouse's, and your child dependents.
and a lot more than that sometimes. It's kind of cool, actually.
Yeah.
Hancock Lee's asking when you put in your personal information to set up an entity, social security number, things like that, does that eliminate your anonymity?
It's a great question. So we're not trying to be anonymous from the government or from banks, just from public information. And so banks have a requirement, an anti-money laundering and the know your customer requirements where they must collect that information, but they also cannot make it public information. And that's the big difference there. So if they make it public information, then sue them because they're not allowed to. But yeah, you have to disclose that information because they have to do their KYC and AML checks to make sure that you're not laundering money. Just don't launder money and then you have nothing to worry about.
Great.
Medicare premiums pre-tax. Do we get to deduct them? I don't know. I don't pay Medicare and I haven't looked. But if they're post-tax, then maybe.
Yeah, I don't think those
Sorry, Dale. I'm
qualify.
not sure.
I don't. Yeah, I'm pretty sure they don't. Maybe it's a different way to do it, but I'm pretty sure they don't. That's last I knew.
Did we
Preston,
get them
thank
all?
you. I
Yeah,
think we
man.
did. I really do think we got them all. Very eye-opening. Absolutely, Tina.
Yeah. You want
Preston,
your mind blown more on Tina? Come to the 2 day as it or the wealth
yeah.
protection event. It'll be awesome.
And I'll put that in the chat as well. It's protectwealth.com. I'll just put that there. You can register at protectwealth.com. Love to have you. I would suggest coming because, if you want to sign up for a consult, please do that. 45 minutes. It's free. What is it going to hurt? And I love that. They're not going to twist your arm. One of the things I love about it, and I've heard from many people who've done the consults with your team, Preston, is they will have the consult, they'll get a strategy, or they'll have a strategy kind of mapped out for them. Here's what a professional from Anderson Advisors recommends. Maybe two LLCs, a living trust, whatever, right? And then from a professional what you actually need moving forward. Whether you do that or not, it's up to you. We provide the resource. Anderson is incredible. Use them or not, we're kind of low pressure. Kind of right, Preston?
Yeah, yeah. What we want to do is make sure that we're working with people that want what we do and they understand, and then we support them the whole way because we want a long-term relationship. It's not a one transaction kind of thing. We want you around forever. We want you to recommend us to your friends and your children and maybe your grandchildren someday. So that's the
And
idea.
a lot do, don't they?
Yeah, yeah. I mean, we've been around 27 years now, so more and more is multiple generations, and it's great to see because, uh, you know, you're learning, and man, they don't teach any of this stuff in school, so you have to teach it to that next generation. And I know my kids, they sometimes they dread the dinner table, I think, because they know dad's only going to talk about this stuff. So
Well, we appreciate your questions, guys. Thanks for joining us tonight. I love it. I learn a lot every time too, Preston. I'm excited to see you in less than 2 weeks.
yeah, 2 weeks from yesterday. Yep.
2 weeks from yesterday. So please sign up. That's August 31st through September 1st, protectwealth.com. Preston will be there, and this has only been about a little more than an hour. So you've probably got 6+ hours, I think, ish on that next event at
Yeah.
least. So get some rest.
I have so much, I could have done this for 3 more hours, but our East Coast guys are probably ready for bed. So.
Yeah. Well, Preston, thanks again for your time. Everybody, also, thank you for being on tonight. We really do appreciate it. Please reach out if you have any questions. We're happy to help you. Otherwise, we'll look forward to seeing you in a couple weeks.
See ya. Have a great night,
Everybody,
guys.
thanks so much, Preston. Have a good night, everybody.